Welcome to Geared for Growth. I'm your host, Mike Mortlock, Managing Director of MCG Quantity Surveyors and Board Member of the Property Investment Professionals of Australia. Now, it might sound like I'm just trying to pad out my resume, but I bring up PIPA as today I'm thrilled to have Nicola McDougall, who's the Chair of the Property Investment Professionals of Australia, and we are chatting to her about the annual 2024 Property Investor Survey. This is a really important litmus test for the state of property investing in Australia, and we unpack some worrying trends that have fed into things like the national housing crisis from a rental affordability point of view, and that is investors selling. I have a chat to Nicola about the survey, the state of play of property investing and the political interventions and how that's fed into the data. There's a couple of other interesting stats around the periods of time that people hold on to properties and much, much more. Nicola's got a huge resume in property investing as an editor, a journalist, an author, a ghostwriter, and much, much more. But she's here, at least for the first time, to unpack this survey before hopefully getting her back to cover some other topics. But here's Nicola. Nicola McDougall, thanks for joining me on Geared for Growth.
Thank you for having me, Mike. It's always fabulous to be here with you.
Well, you know what? I normally always say welcome back, but this is actually the first time I've had you on the show.
It's not.
Yeah, I'm pretty sure it is. And, you know, I've actually only known you personally for, 12 or 24 months, but been a fan for a number of years, way back to the editor of API magazine. Obviously, you're a journalist, and now we get the opportunity to work together with you being the chair of the Property Investment Professionals Association of Australia, and myself now as a director as well. So it's a sincere pleasure. So thank you very much for joining us.
I'm surprised by that because I was sure that I'd been on your show before.
I think we spoke about it a number of times, but I don't think we have. And I would love to unpack a lot more than what we're going to do today, because of course you're an author in the space of property investment. You've written a number of books that have got other people's mugs on the cover. There's all sorts of things.
A few with my own, all with my own.
Yeah, some with your own, admittedly.
I don't do other people's anymore.
Right. Yeah. And they probably don't want us to be talking about it on here anyway. So we're going to narrow the scope and talk about the PIPA survey, the 2024 Annual Investor Survey. And I think it's really, really important, specifically the time and space we're in at the moment, where we have politicians, both state and federally, looking at housing and the policies in and around housing and making some changes, some modelling on changes that we've taken to elections in the past. It's a quagmire of what the Spanish might say, mierda, which is, I guess, a way of me avoiding saying shit on a podcast, but I've done it now anyway.
Well, I'm sure it's not the first time.
No, probably not. So how long has this survey been going for PIPA?
10 years. So this year was our 10th annual survey. I've been on the board for 10 years at the end of this year. And on the periphery, I guess it was a new board member, all those years ago. So the survey is much different than it was back then, but also the association is much different than it was back then too. We were still very grassroots back in those days. I mean, still are in a way, I guess, compared to some of the other bigger industry associations. We're certainly, have a very big profile out there these days. So the survey has evolved over the years along with the association too. And this year we decided in our infinite wisdom to rebuild the whole thing. We probably should have thought about doing that a bit earlier than what we actually did. But anyway, we decided to rebuild it and take it back to zero and start again, and include a raft of questions that we always have in there, but also a variety of new ones, which fundamentally meant that the survey was twice as long as it normally is. So I'd like to give my heartfelt gratitude to the 1,288 souls out there who spent between 20 and 30 minutes of their time completing the survey for us, so that this year, again, we could produce a really, really statistically relevant and robust a survey with research that's really insightful and real time about what's happening right now in the mindsets of investors around the country.
Yeah, and I guess if we don't get measured, then we don't matter in the eyes of the policymakers. So this is a real opportunity to take data of investors out there and take it to politicians and policymakers to say, this is what the impact of that is. And we've seen the impact of a couple of different things. The Queensland land tax, which I know, thankfully, you had quite a bit to do with that being repealed. The Victorian land tax changes. We've had minimum standards, tenancy legislation. And the net result, I think it's fair to say, and I'm interested to hear how that kind of translates into the data, is that investors have quite broadly said, I've had enough, and have exited the market in a way that I suppose previous surveys haven't necessarily seen. Is that fair to say?
Yeah, I think so. And what's important to clarify, Mike, is that until obviously we've had the survey for 10 years, and in previous surveys until a few years ago, we would ask, whether investors thought it was a good time to sell. We didn't really dig much deeper than that. And then a couple of years ago, when the rental crisis was really apparent, we took the opportunity to adapt the survey again to ask investors for the first time, if they had sold, where they had sold and why they had sold. And that data had never existed before. And I've often said, when I'm having chats about the survey, that until relatively recently, I guess none of us really, because we had a stable rental market, so we didn't really need to sort of drill down into whether investors are selling and things like that too much, because everything was equilibrium thereabouts. I mean, you'd have moments where you had oversupply and undersupply, but generally speaking, there was enough rental properties out there most of the time. Yeah. Well, a couple of years ago, that was no longer the case, and that's why we decided to start asking these questions of real-time investors of whether they'd sold. So the 2022 survey was the first time we did that. We actually asked them at that time if they'd sold in the previous 2 years. So that data set's probably not quite as, doesn't correlate, I guess, that well to now. We ask over the last 12 months. But so over the last 12 months for this year's survey, about 14% of survey respondents said they'd sold at least one investment dwelling in the previous 12 months. Wow. That was higher than last year, which was 12%. And that was a bit of a surprise to me, because I thought that, it was a surprise and it wasn't, but, the fact that people go, oh, well, it didn't jump up that much, but you're still talking about, 14% of investors potentially having sold a dwelling over the past 12 months. About 44% of those dwellings were bought by existing owner-occupiers. So upgraders, downsiders, things like that, people that were already homeowners. So those properties, didn't remain in the rental market probably. And that, is a problem with the supply that we have. I often hear arguments from certain parts of the media about, well, isn't it great that investors are leaving the market? That means we're going to have more people that are buying and this and that. Well, yes, I support, we all support that work in our industry, property ownership, whether you're a first home buyer, you're an investor, you're an owner occupier, we all support that. History tells us that, society is never going to be 100% property ownership. And also we can see right here, right now, with the continuation of record low vacancy rates, that there's hardly new rental supply is not coming onto the market, is it? So those people that in certain parts of politics and some left-leaning media who are celebrating investors leaving, if they really want to understand the impact of that, one only needs to look at the continuation of those record low vacancy rates around the nation.
When you sort of said the difference between 12 and 14% of investors sold in the last year, I think we get sort of bewitched by the idea that, 12 and 14 are close together. But if you work that out, that's a 16 point, 2/3 percentage increase, which is actually quite significant. And I was going to ask you the question, okay, well, investors are selling. I'm guessing that politicians and left-leaning media, as you say, will say, oh, that's great, because a first home buyer will definitely have purchased that property. But that seems to be a pervasive notion that goes all the way into parliamentarians and decision makers for housing policy. So that was that sort of a surprise to you, or is that a surprise to people that you communicate with, that you take an investor out, you don't necessarily get this beautiful blossoming new first home buyer?
No, and that's why we ask investors in our survey every year who bought that property. And this year, as I mentioned before, 44% of those properties were actually purchased by existing homeowners. Compared to last year, 31% of those properties were actually bought by another investor, which was up from last year at 24%. So that is an improvement, I guess. But again, the total volume, the total percentage of investors who sold was higher than it was last year. First home buyers bought about 21% of those former rental properties. So we always have a continual difference of opinion, I suppose, out there about, okay, well, like you've just said, an investor sells, great. Then, because one thing that's really annoys me, Mike, and I've been doing this for a long time, is this misunderstanding of the impact that investors, the negative impact or the positive impact that investors have on transactions. And there's always this narrative out there that first home buyers are competing with investors, and yes, while some investors are looking for affordable properties, most of them, if they're smart, actually are working within really strict budgets and price points, and they won't go out of that. I mean, we all know, for those of us in the industry, that it's emotional home buyers that generally drive up prices. It's not investors who are actually doing it for a variety of reasons. One of it is to be savvy and to buy within their defined budgets. Yes. So that's kind of annoying to me. And look, no matter how many times, the survey is 10 years old. We've been producing this particular type of data for the last 3 surveys now. There is much more awareness of it. I know that policymakers are aware of it. The other day we had a PIPA webinar, and where myself and Ben Kingsley, the chair of the Property Investors Council of Australia, our sister association, unpacked the latest survey results. And we know for a fact that a research analyst from the RBA was actually one of the attendees to that webinar. So it's really nice to know that our research is getting the platform that it deserves, and investors are getting the voice that they deserve. Unfortunately, that doesn't mean that we're not seeing a raft of policies come out that are targeting investors, whether that's rental reforms, which make owning a rental property unpalatable or unfinancially viable, or it could be something like what we have in Victoria now, which is the new temporary land tax that lasts for 10 years.
Yeah, I love the temporary.
I love temporary.
Yeah. If I got a temporary tattoo on my face and I found out that it lasts for 10 years, I'd be rather upset about it. Now, we can speculate, Nicola, that investors have just sold because they've got the shits with all this stuff, right? But what does the data say as to the reasons why they're selling?
Look, that's a really good way to describe it, Mike. I'm loving that turn of phrase. But yeah, the survey this year, so of those investors who had sold a property in the previous 12 months, the number one reason was increased general holding and compliance costs, such as increases to insurance, and all of those of us that have got insurance understand how much they've gone up. That minimum housing standards legislation, that people have not really even considered the financial impact of that on existing investors. And then also such increases to changes of property management fees, etc. But what was really interesting with the survey, and it's a national one, the number two reason why investors said that they sold in the past 12 months, and investors could choose more than one reason, was increased land tax or government charges. Number three was to reduce total debt exposure. And if we think about, the record high interest rates we have now, not unsurprising that many investors, perhaps those, like many of us who generally have been investing in a relatively low interest rate environment, and I'm not just talking about COVID, I'm talking about, the period after the GFC to COVID, interest rates were historically lower than average. And so with those rates having gone up so much over the last 2 years, it's perhaps not that surprising that investors have decided to, reduce their debt exposure, even though we have been in an environment where where rents are increasing. I mean, the rent increases are very small compared to the total increases in holding costs that investors are having to bear at the moment.
I was going to ask you about that one because I saw Australian Property Investor magazine shared some insights about the percentage of costs that were passed on to the tenant, and it was minimal. And there was another question, and this might be a year or so ago, how likely would you be to want to increase rents at the risk of losing a good tenant? And people were quite sensitive to the risk of losing a good tenant. But the politicians and the tenancy advocates will say, well, all of the costs incurred by landlords have just been passed on into the market. What do you say to that?
The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
So our survey asked the question of, how much have how much have their interest rate repayments increased since those record lows of COVID. I think it was more than 70% of respondents said it was anywhere between $10,000 and $60,000 per annum, so annually. That's just interest rate increases. So we're talking about tens of thousands of dollars most investors are having to pay from that rising interest rate. Those rising interest rates, of course, we've got a plethora of other increases to holding costs as well. And then we asked survey respondents, okay, so of all of those total operation increases, how much did you pass on in the form of increased rent to your tenants? And 55% said less than 10% of their total increase in operational costs. Now, that was the same percentage as last year. So, those of us who are property investors who've been in the game for a long time, like you just mentioned, Mike, and we can say this until we're blue in the face, and some policymakers believe us and some don't, depending on which side of the political divide they sit. But we want long-term tenants in there. We want to, that's what we want. We want them in there for the long term, paying, a good rent, looking after the property as their home. Like I've had a tenant who was in my property for 8 years. The rent was actually well under market value. He actually left, but then I decided to sell it as one of these people who have sold investment properties over recent years. So, and it's not like the market will only bear what the market can bear, right? And so we are starting to see already that moderation in rental increases happening around the nation, because at some point it just, the market goes, okay, well, I can't afford that. Yes. Landlords or investors, as I prefer to call them, have to reduce the rents that they're asking for. And it's not like, okay, if we say, with one of my properties, my expenses have probably increased $2,000 a month, maybe more, probably $2,000 a month for one of my investment properties. The rent increase for that property is probably $600 a month. So there's a $1,400 shortfall there. But I couldn't just turn around, okay, my holding costs have gone up by $2,000. I'm going to double the rent on that property. Well, it just is not realistic for that type of dwelling and that type of location. So, unfortunately, the narrative around these things is pervasive, but we continue to try to explain in clear and concise language, backed up with data, what the reality is for the 2.2 million people around the nation who have an interest in a rental property.
What's interesting here is we've got this data that says that property investors aren't passing on those costs, but there's a pervasive notion that, well, that's just what happens. They just pass on the cost. Now, we fast forward a couple of years into the future. Yeah. The ATO tax stats, which we've only just recently seen the 2020, 2001 stats, because they're always quite lagged, will eventually get to the point where negative gearing losses increase because these costs haven't been passed on and the landlords are wearing it, which I think is, it's quite an impost for the landlord, but it's good for tenants, right? That it's just not possible to pass that on. Obviously, people can only bear what they can bear, but, can you anticipate that this will be another time that we kind of get the negative gearing stuff on the agenda like we're seeing right now? And I'm imagining that your phone was sort of ringing hot last week when Treasury were asked to kind of model some potential changes towards the upcoming federal election.
It was, Mike. I must admit I did something that I don't often do, but I do know a little bit about PR. I actually said to a couple of journos, I said, you know what, I actually don't want to give this more oxygen just yet. I'm not too sure. All we know is that it's an unnamed source that's ended up in one story, and the media, like if it bleeds, it leads, right?
Yep.
Jump all over it like white on rice. So I did make some commentary. Sometimes I didn't. What was really, really unique was, the next day or the day after that, when the Prime Minister actually was on breakfast television quoting a statistic from the Property Council of Australia that said any changes to negative gearing would impact rental supply. I nearly fell off my sofa because I've never heard a Labor politician.
Yeah. So what colour's your tie again?
Yeah, exactly. Yeah, I was like, what? But then that was, from our point of view, that was amazing, right? That we actually did have someone. And let's be honest, I was thinking about this morning, as you do, that the only election that Labor has won over recent years was the one that it didn't take negative gearing as a platform to the federal election. 2019 they did, the election before that they did, the last election they didn't, and they won. So, look, they would have to be extremely foolish to open up that can of worms. And I did post on LinkedIn last week, just as a bit of a funny, that, the last time that they took negative gearing changes to the election, of which they lost, well, they didn't win at the time, the residential vacancy rate, I think from memory, was about 2.4%. Now it's 1.3%. So I kind of put that up there and said, oh, good luck with that.
Yes.
Because they couldn't, even, in 2019, so 5 years ago, when rental markets were generally actually, doing all right, there was a nice balance there. That's widely believed to be one of the reasons why they weren't successful in their campaign. So you would have to be a bit of an idiot to try again now when we have a really, really entrenched rental crisis. But in answer to your question, Mike, in a very long-winded way, our survey actually asks investors about their cash flow position. So whether they're positive, negative, neutral. And you've caught me a little bit on the hop here, but generally speaking, a couple of years ago, because we had those record low interest rates, and I'm going into the recesses of my brain, my very big brain, I think about 60% of investors said that they were positively geared a number of years ago, because we all were. When you've got 1.9% interest rates, like happy days. But now that has fallen to 30%. So we've automatically, in the last couple of years, we could safely say that investors have, about double the amount of investors are now negatively geared than what they were 2 years ago. Now, we didn't go out chasing negative gearing. It's just the result of the change of interest rate policy settings. Exactly. And the fact that the rental increases have gone no way at all to sop up those, vastly increased mortgage repayments that we automatically already have from that. So again, another absurd narrative out there because during the course of your property ownership journey, you'll have periods like this, where you are positively geared. Maybe it's neutral and maybe it's negative, like many of us more are now, just because of the fact that we are experiencing these much higher interest rates.
Yeah, it's funny, isn't it? It's the idea that all property investors want to be negatively geared when, we're all kind of thinking about the last couple of years where it's like, oh, do you remember when our portfolios were cash flow positive to the tune of 20 or 30 grand, and now it's neutral or it's negative? Yeah, it's kind of weird.
Well, and look at it. I mean, could you imagine though? I mean, and clearly the RBA, they drop rates at the drop of a hat when, something bad happens. But, could you imagine if most of us hadn't ended up being positively geared there? Could you imagine the woeful state of the rental market right now? But also the fact that investors from that period on, and I'm certainly one of them, and every person that I know who's a property investor, including, people that have been in the industry or as property investors for a long time, we've all sold at least one property. Some people I know have sold their whole portfolios. What are the reasons for that? Obviously, there's a bunch of these, government intervention happening. But I think fundamentally, and from a psychology point of view, of which I am not one, many of us, we're all fundamentally changed from their experience of COVID, and perhaps we all just don't want to be left so exposed financially ever again. And many of us have just decided that, okay, I think, because I remember I was sitting there and I was single. Oh, no, I wasn't single. I was married, but I had 3 properties by myself in my own name, self-employed. In a business that was in the property and finance sectors. And I just thought, oh my God, I'm going to be bankrupt here. Everything that I've worked for all of those years, I thought it had all gone down the toilet. And the fact that at one stage it looked like we were going to have those emergency tenancy laws where, tenants can stay there and they don't have to pay any rent. Thankfully, that didn't happen. But those types of experiences change people. And we've never actually asked that question, as a reason why people are selling, but I just feel certainly in my own relatively big circle of property investors who we've all sold one. And if you had asked us pre-COVID if we were even thinking about doing any of that, and most of us are not, north of 60 or anything like that, nearing retirement at all, we wouldn't have been thinking about it. But I just feel that anytime that there's these, quite significant events in life, but also when governments come in and make these quite extraordinary potential policy changes, there's, not unintended consequences, because those consequences were always going to happen. And I just think that they didn't really care.
Yeah, and you're right. I think your point is backed up by RBA data that showed the household savings rate went through the roof during the pandemic, because we were all quite fearful. We were building, war chests to kind of stave off the zombies in the streets or whatever.
I think most of that war chest is gone now.
Oh, yes. We've bought
by the look of some of the market conditions around the country, I think everyone's run out of money pretty quick.
There were a lot of trips to Bali and quite a few Range Rover sales. I mean, we got over it pretty fast. So speaking of sales and optimism and buying of stuff, there are property investors that are still very actively transacting.
Oh, and that's 100%, Mike. And, I know that we, certainly over the last couple of years when we're talking about the survey, it's all very negative, and it's it's not meant to be, but it's important that, we understand what role investors selling has in the state of the rental market at the moment. Do you know what I mean? But, there's still plenty of investors out there who believe it's a good time to buy. Just over 45% actually believe now is a good time to invest in residential property, slightly down from last year, a bit down from the 62% recorded in 2021, but that's not that surprising given interest rates were so low.
And they were right.
What was really interesting though, Mike, with the data was that we asked them, okay, where is the best place to invest in right now? And we've, I think we mentioned at the outset that, a lot of investors have been selling in Melbourne for a variety of reasons. But conversely to that, and kind of probably a little difficult to understand, I suppose, for some people, is the fact that Melbourne was the number one location where investors indicated it was the best place for property investment right now. We should have asked them, we did actually ask them why that was, and I haven't got that data in my brain. But a variety of reasons. Obviously, Melbourne's market is depressed, needs to be on Xanax at the moment. Number 2, I think from memory, was Perth. And then it was, let me have a look here at my results quickly, Perth, and then it was Brisbane. And regional Queensland was the best regional market to invest in according to this year's survey results. Interestingly, last year, investors indicated that Perth was the capital city with the best investment prospects this time last year. And you know what? They were bloody right.
They were right. just like time to buy in 2021. And if they did park it in 2021, in early 2021 in Perth, geez, I mean, drinks are on
100%.
them.
Exactly. And Brisbane has often been the number one location where, for years, was number one location that investors said was the best place to invest until last year when Perth overtook it. And you know what? Again, like, our investors, our subset or our survey respondents, they're on the money, because then, for the last few years, they're saying, Brisbane was definitely the place. And like those of us who own holdings here in Brisbane, things are very good. Thank you very much. Prior to, give it 7 or 8 years ago, things weren't so great. But there certainly has been a lot of growth here in Brisbane. But yeah, the Melbourne metric, that's very interesting. Clearly, a lot of people recognising that, those really much lower dwelling prices that we have in Melbourne today make it more affordable than other capital cities. Is that a good enough reason to invest in there? I think people need to do their own research and preferably work with qualified property investment advisors or PIPA members to determine that, because it's clear from the results that over the last couple of years, Melbourne, people have been selling more and more people have been selling more and more in Melbourne, and the predominant reason for that was that new land tax, which was actually announced in May last year. As we talked about, it's a temporary measure for 10 more years. What impact is that likely to have on the Melbourne market over that period of time? It's hard to tell, but one should never speculate when investing in property.
That's true, yes. And people can go to the PIPA website and search for an accredited advisor, which I definitely recommend as well. Were there any other big sort of standouts or data points that you kind of thought was perhaps against the hypothesis when we were redesigning the questions for it?
We asked a bunch of new questions this year. One of them was about the holding period of the properties that investors had sold. And I found it really interesting that I think it was about 17% of investors, the property that they sold, that only owned for 3 years or less. I thought that was really interesting, given that we have such high entry and exit costs in property transactions. Why are these people, why are they selling with such a short hold period? I mean, most of the people that complete our surveys are sourced through our members' databases. These people are the people that choose to work with property investment professionals, work with PIPA members. So I would certainly say that our survey probably skews a bit more educated, because those people are already actively working with property experts. But yet, even if we're saying, well, we've got a subset of investors like that, nearly 20% of them, or 1 in 5, actually sold in the last 3 years. What's that about? One would have to think it's something to do with interest rates. Yep. Maybe it's to do with the land tax. We actually have the ability now to drill down into the data in greater detail. I just haven't started doing that yet, so I'll be able to have some more metrics about that too. So that was interesting. From a representation point of view, a couple of months ago, I went to a stakeholder meeting with the Queensland government, and I get invited to these things, which is better than not getting invited. Yep. So it's nice to have a seat at the table when we didn't used to have at all. But they were talking about this particular policy, which I'm not too sure. I can actually talk about it, a rental code of conduct, and which supposedly they wanted to apply to property owners and tenants, separate to the existing residential tenancies legislation in that state or territory. So like a code of conduct that you would get fined if you weren't doing the right thing or something like that. And I'm sitting there, and for the first time in my life, both myself and someone from the tenants union were on the same side of the argument. Never happened before, never going to happen again, because we're both sitting there going, what on earth has this got to do with tenants and property owners, when we've got existing tenancy legislation, you've got property managers, why is this even a thing? All it's in other states. And we were like, is it really? And they went, oh, well, not in this format, but we're going to go bigger, or whatever the term was that they used. Anyway, so I had to explain to them that the majority of property investors, the vast majority of property investors, use professional property managers. So how on earth could someone, not adhere to a code of conduct in a property owner-tenant relationship when we actually don't have any relationship with the tenant, because it all goes through the property manager? And they had never really thought of that before.
It's a worry.
You're like, so how would, someone's going to put in a complaint about the property owner who they've never met, and most of the time don't even know their names, and everything is going through as it should, the property manager, and they had never understood that before. But so in the survey we asked, do you use the services of a professional property manager? And it was 97%.
There you go. Yeah.
So that was a bit of a long-winded story, but there's things like that where you just bang your head against the wall sometimes, that they no matter how much data there is out there, and how much we certainly give our perspective on things, when someone has a specific idea about something, a huge bias, they're just not prepared to probably hear anything that's contrary to that.
Is this something that you've observed over the last 10 years, or has it only become topical since we got to these really, really crisis low vacancy rates that every state and the federal government are now getting forced, or believe that it's a battleground that their electorate is cognizant of, so they have to get on the front foot to be seen to make changes?
Yeah, it's hard to know. I certainly think that the rental crisis, because I've obviously been involved with PIPA for nearly 10 years. I've been involved, with representation in the property sector since 2006, state-based previously, but now national for the last 10 years. Whilst there are always populist politics where little levers try to get pulled or such, in regards to residential tenancies legislation, it is always amended quite regularly. Sometimes by the time it's amended, the issues that they were trying to address that have already been sorted out by the market. Yeah. So that's always interesting, that you end up with legislation that's not fit for purpose because it took them 2 years to actually put it in, and they didn't really need to do it in the first place, because they just didn't believe that, the market can sort these things out on its own. But and look at national level, there's certain things in regards to property investment that are always hot button topics, and but then again, they can win or lose elections, which is why I was not too worried last week with the negative gearing story that popped up, and why I actually said I didn't want to give it more oxygen, and I'm kind of proud of that in a way. But the rental crisis has changed the goalposts. I think everybody is scrambling to find someone to blame. They're trying to find short-term solutions to a long-term problem. The rental crisis is nearly 10 years in the making, for a variety of factors that I've spoken a lot about in the past. But now that it's here and it's not going anywhere, I think most state governments are trying a whole bunch of things, not really caring, I think, if it works or not. They've got to be seen to be doing something. So it has got a lot more challenging than it used to be, in answer to your question, but that's because the environment in regards to rental supply is the worst, certainly since I've been doing this for 20 years. You have periods of time where property, rental markets are oversupplied or undersupplied, generally speaking, but never a situation like we've got now where there's just simply not enough supply for the amount of tenants out there.
And that seems to be something politicians are talking about ad nauseum. It's a supply problem. We need more supply. We have the National Housing Accord, which equates to this lofty target of building 240,000 homes a year. I think in recent years, the closest we've got is about 179. It's tight. There's a record amounts of liquidations of building companies. Material cost inputs rose by 33% during the pandemic. Material costs are at the lowest rate of growth since, I think, 2002. But it's still, it's quite elevated. Is there any reason why politicians and policymakers don't consider participation by property investors as actual supply, because when you build something, it doesn't happen overnight, but when you disincentivize an investor and they sell, that's actually an overnight change to supply. Where are we going wrong here?
I know. The answer to your question is no. The current cohort of people in power around the nation don't consider that, no. Perhaps when we have a potential change of governments at state level, like we have the Queensland election here in a few weeks, we have the federal election next year, perhaps we might have some more opportunity of support for property investors. I remember saying a couple of years ago that, because how we have these various first homeowners grants and all that sort of stuff all going around, but then they tweak around the edges. They can't leave that alone either. They always got to put their fingers in the pie in some way. Like, we'll tweak this, we'll turn that. It's like a little doll's kitchen, little kid's kitchen back in the day. But they're always continually doing something. But I said a couple of years ago, and I still stand by this. So we can put $50 on it if you want, mate. Right. $50 or some Christmas presents for each other or something like that. But if there ever was a time to improve the supply of rental properties in the country, it is, like you said, to motivate and encourage the people that supply the majority of those rental properties, and that is the everyday investors. Wouldn't it be wonderful if we had a first investor grant, or just some type of policy, not even first investor, but okay, you want to buy an investment property, we're going to provide, XYZ. We're going to give you a period. Maybe they cut the stamp duty. Maybe there's a period of time where you pay half the stamp duty as what you normally would have, or maybe there's a capital gains tax deduction based on if you own this property for 10 years, for example, the capital gains discount will be 75% instead of 50%. Yeah. There are a bunch of policies and that can be implemented to encourage more investors back into the market, and importantly, to motivate them to stay over the long term. So at some point in the future, and let's be honest, we're in the situation, we're in the trenches right now, and we're going to be this way for quite a few more years. What we really need is more investors to come back into the market, and what we really need for them is to have the confidence of a long period of policy stability, and perhaps some type of incentive that will encourage them to stay over the long term. And when I say that, I mean, 10, 20 years.
Far from incentives, though, we have a fairly long-running rhetoric about investors kind of being the problem or being the devil. And as recent as last week, I think the ABC had an article saying, is it ethical to be a property investor? Is it actually ethical? But I'm wondering, from an economics point,
what do they mean by that?
I'm not entirely sure. I guess they're sort of saying that housing is a universal right, and it's something that puts a roof over. Yeah, shelter's a universal right. Yeah, housing and shelter are two very different things. Well,
they are.
Picked up.
That's right.
But I guess they're kind of saying, well, this should not be an investment class. This is something that shouldn't be bought and sold and traded. However, economically, two things sort of spring to mind in my head that I'd love to get your thoughts on. One is the back end. So if you're a property investor and you get any sort of success, you're far less likely to be a drain on welfare in retirement because you might be self-funded. And, I've seen Facebook groups where people say, a pension isn't welfare, it's a reward for, a hard-working career and paying taxes and that sort of stuff. I'm like,
living on baked beans.
Yeah. I mean, well, firstly, it's no living, and it's certainly reward is not the right thing, but it is welfare, no matter how you look at it. And our welfare budget in Australia is quite significant. So if we can remove people from this bucket where they are a drain on the economy because they're making financial decisions about their future, that seems to be a positive thing, right? And at the end of the day, you can go back decades and decades and decades and see that around about a third of property investors, around around about a third of people rent their property, and the government has really kind of stopped participating in
Yes.
private accommodation to the point where 91% is owned by the mum and pop investors, or let's say the private investors. So economically, it kind of makes sense, because the alternative is, instead of the government owning 380 odd thousand investment properties, they kind of need to own, say, 3 million roughly to swap that out if we don't have property investors. Where do you land on that? I mean, is what I'm just saying ridiculous and hyperbolous, if that's a word?
No, never. That example you gave at the end there, it does sound like we're going to be living in Cuba if that was the case. Housing for all. It might be falling down by your ears, but look, and you're right, Mike. From about 30 years ago, we did see some policy changes that were created to encourage, investment into property. And certainly from the early 2000s, we started to see quite a big increase in the number of property investors around the nation. I guess the deal that was struck was, okay, you've got negative gearing for a period of time, because at some point, if you're actually a good investor, your property will not be negatively geared. It'll be neutral and positively geared, and you'll be paying tax on that difference. And also, we'll give you the 50% capital gains tax discount. There is not enough coverage in the media about the billions upon billions of dollars that property investors pay in capital gains tax. Like the government, even if they're even if property investors can access negative gearing for a period of time, the government, I know we've got some PIPA research, which is not in my brain just at the moment, but the government is, billions of dollars better off from investors being in the market than they are in regards to the amount of money that they might be, giving back in personal tax income returns. So that's never really part of any story that we see out there, is that, property is highly taxed. And in Australia especially, like, we have stamp duty on the way in, we have capital gains tax on the way out. That's not the case in many other countries. Actually, recently I really considered seriously whether I should buy something back in my homeland of New Zealand, because the policy settings were a bit more attractive. But the deal that was struck all those years ago, and that has been maintained from successive federal governments, no matter the political persuasion, let's be honest, even though they might have tried to change them in the lead up to federal elections, which have never worked, was that, okay, the government, federal government, states governments no longer felt the need to provide a huge volume of properties, certainly for the most vulnerable in our community.
Yes.
Social housing, affordable housing, like they got rid of NRAS, which was a mistake. Like, that was a really popular program for a lot of investors, worked really, really well. But seemingly they decided not to fund it anymore. Don't know. So there was some great research that I saw, several months ago from CoreLogic. And I believe that, historically speaking, governments used to, of new supply, I think about 10% of it was government funded many, many years ago. Now it's less than 2%. So it's kind of like a quid pro quo situation. Like, governments went, okay, well, here's these taxation benefits. We'll give you 50% off your capital gains tax. And then they go, oh, we don't need to do that anymore. So they didn't. And not only did they not, like, if we really want to think about, yes, investors selling is part of the story that we have here. Investors not being able to buy when those APRA changes came out, that's another big part of the story from 2014. But also another big part of the story, which I don't think any government wants to admit, is the fact that they simply stopped building properties, building new supply to provide accommodation for the most vulnerable in our community. And they did that by a huge factor. Okay, it used to be 10%, now it's less than 2%. Not only were they not building the normal supply of properties that they used to, they were actually selling off a lot of their old social housing, state housing. They were selling that off to make their bottom lines look better. We just look at the Rocks, for example, or plenty of places all around the country where state governments were just selling off supply, and they weren't replacing it.
It's just far too valuable to own, an apartment complex in the rocks for public housing, right?
I get it. But, we're seeing, I think at the moment there's somewhere, I think it might be in Melbourne, where there's, some formerly social housing is being demolished, I think. I mean, look, and there is obsolescence out there, I get that. But these things are being demolished and they're not actually being replaced. So, look, I think it's a quagmire. The rental quagmire that has been many years in the making. But part of the problem has been that private investors were expected to do the heavy lifting for decades, and we did. We actually did. And therefore, it makes no sense, really. And as I say, look, investors are selling for a number of reasons. Generally speaking, and if you can afford to hold, I think you should. But it makes no sense now. If we were all doing it for purely, profit reasons, when you've got a tight rental market, rents have gone up, capital growth. Generally, we've all had a lot of capital growth. One would think you'd be staying in the market, but investors are not. They've sort of they've gone through plenty of worse market conditions than we're experiencing now and held, but many of them are deciding to leave, and it's because, I guess, of the changing goalposts, and that's the reason why I said before investors deserve long periods of policy stability. Because it's hard to hold something, with a 10, 20, 30-year mindset when the taps are turned on and off or the goalposts are perpetually moving. It's very hard to keep your focus on the horizon.
Absolutely. Now, we've only unpacked a very small amount of the survey and we're really out of time because we're just raging
against... It's supposed to be 20 minutes.
Yeah, pretty much. But it's my own show. I make the rules. But we're raging against the machine that is anti-investor sentiment when I think there's fair enough proof to say all of these incremental changes, like the APRA changes, like the Royal Commission into banking and the two elections where negative gearing was on the chopping block, we're seeing the fruits of that labour. And of course, some of the tenancy changes on a state basis as well. We're seeing the results of that now. If people are wanting to dive more into the data of the PIPA survey, what's the best way to get their hot little hands on that?
Yes, so it's on the PIPA website. I don't know exactly what section it's on, but you'll be able to find it very easily. And what's great about it, the survey, is that we actually on the same page, you'll actually be able to find all of the surveys for the last 10 years.
Beautiful.
Yeah, all the survey reports anyway, not the actual raw results. So that's, a really important data set for people to understand. And just to finish off, Mike, I really want to be clear that all of these things are happening, and our job is to represent people that are working in the property investment advice profession, and by proxy investors in regards to PIPA. But, the opportunities for property investors around the nation are still profound. Yeah. Whilst we are starting to see these type of things happening in the market, concerns about various taxes and rental reforms, property investment still remains, a very sound strategy for anyone who is looking to improve their financial lot in life and who is looking to be self-funded in retirement and not try to survive on the pension, because that's what we're talking about. I'm actually seeing some family members experiencing that at the moment, and I tell you what, I'm glad that all those years ago when I bought my first one, that's not going to be my story, because I said to my uncle the other day, can you survive on the pension? And he goes, hell no. Like, he's having to draw on the meagre super that he had. Like, he hadn't really invested in property. I mean, he's got his own home, so that's great, but he's having to dip into his savings all the time just to keep his head above water. And that's no way for anyone who has worked hard their whole entire life. My uncle was a retired carpenter, worked very hard his whole life. That's no way to end the final years of your life. Struggling to put food on. He's not, but really to have to question when you're at the supermarket what you can afford to buy and whether you're going to, do this to buy a six-pack that week or not, or whatever it is. That's what most of us are doing, right? Where most investors own one property, like we always know, and a few more own two. Very, very, very few own, three or more. And what we're trying to do, whilst also providing rental supply to tenants, because government stopped doing that a bloody long time ago, is that at the end of our careers, and for the years that we may have left in retirement after that, is to not be a burden on the public purse. And I don't understand in this country why that's seen as a bad thing.
I think that's a good way to wrap things up. Thank you very much for sharing your time today, and thank you for your service as the chair of PIPA and for delivering this survey. We look forward to the political debate in the lead up to the next election. Keep your phone on.
I know, thank you. I'm just like, oh no, not this crap again. But anyway, meaning negative gearing. But I'm pretty sure that they are too smart. As I said in my LinkedIn post the other day, good luck to them if they want to take that to the election next year. But thank you, Mike. It's good to be here for the first time, even though I thought I'd done it before.
It's possible, but I don't think so. But we'll definitely have you back.
Hopefully you would remember me if I had.
I think I would. Cheers, Nicola.
Thanks, Mike.